A very good morning and welcome to the special edition of Hot Stocks. We are still being buffered by news flow, and Paul, the news just out, in fact, almost an hour and a half ago, that S&P has downgraded South Africa's top 5 banks.
Entirely expected, because of course the way these things work is the national sovereign sets the tone and then the banks, but this is a double whammy negative for the banks, because this means they both have to raise more money, and at a time when it's not very attractive for them to do so because of the increased cost that basically they'll have to pay
So
investors.
we are seeing banking stocks, as expected, under pressure, although, as you say, this follows suit from the
They've been under pressure for the last
downgrade.
week, and of course it just makes absolute sense because, you know, bank investors knew this was coming, and then when it came, it just kind of ratchets them into a very undesirable position.
Adrian Saville is on the line just to give us his thoughts. And Adrian, thanks that we could catch up with you before you head off into a meeting. Give us your sense. Again, you know, not to make too much drama of the situation, this is a step that follows the sovereign downgrade. And of course, we still have Moody's out there with South Africa's rating under review. They have asked for 30 days before they come forward with a decision, which was initially expected tomorrow. Just give us your thoughts in terms of where we are.
I think from a bank capitalization perspective, from a regulatory perspective, from a systems perspective, you know, I would read the way in which banks have repriced as being an overreaction. South African banks are extremely well run, well capitalized, good balance sheets, fantastic regulatory environment. So it ticks all of those boxes. From a valuation perspective, though, so my observation is about the risk then in the system. From an operational perspective and performance perspective, though, they've just been caught in the jaws here. And on the one hand, their cost of capital is going to go up, and to be equally sort of cynical or suspicious. On the other hand, their operational performance is going to get dragged down. So the cost of funding is going higher because of the capital market valuation. And operationally, it's likely that the tougher economic environment that follows from recent activity will put the return on assets and return on equity under pressure too. So they really have been caught in a bad patch.
But Adrian, I mean, what worries me is that we're talking like the share prices have done enough falling already, but with FirstRand, the market leader, going from above 50 Rand a share to just about 40, do you think that is adequate in terms of the share price retracement to capture it all? I mean, isn't there more bad news to come here in the sequential results that get released?
You know, Paul, if anything surprises me, it's the extent to which the market has responded. It's, you know, the behavior is if somehow the ratings agencies have a hotline, you know, or a tunnel to secret information that the rest of us don't have. The ratings agencies are reading the same data and reacting to the same type of information that we have. And certainly, you know, the conditions are tough. Capital costs will go higher, but we're talking about, you know, well-capitalized banks in a sophisticated economy, a global competitive position. I would read this as overreaction.
So to that point then, Adrian, is this a buying opportunity across the 7 banks in South Africa?
If you'll allow me to be sufficiently broad to say across the 7 banks, yes. That should give me a portfolio effect that I can be on balance right.
So you, effectively, and the time is now. Don't wait. They said, I mean, you just said that perhaps possibly this is an overreaction, so you could actually take advantage of today's fall.
Yeah, so Bron, I think you know, when you say that we're waiting for Moody's, of course, we're waiting for the next shoe to drop. But what are they going to say? We double downgrade you? You know, my reading has been for a very long time, although South Africa doesn't carry the downgrade status, we have deserved it. We earned those stripes probably the best part of 2 years ago. And we've been given a stay of execution. What the ratings agencies sort of suggested was they just said what was unspoken. And I don't think that the performance of the banks has been materially impacted. The cost of capital might go higher, but put all of that into the mix, I think you're buying into good businesses at a good price.
But remember, I mean, I don't want to be mean to Adrian here, and he's about to go into a meeting, you said, but he's the guy who buys the super dogs. He's the one who's got the above-average pain tolerance, who likes these situations where you stick your head into the crocodile's jaw when there's trouble on the horizon. I'm not so sure.
Adrian, right to respond to my co-host here.
Well, I think Paul's absolutely right. You know, if you're going to be looking over your shoulder and second-guessing yourself, if you have a low pain threshold, if you don't have a tolerance for volatility, you're probably about to become your own worst enemy if you buy banks here, because I don't think the bumpiness is done. The rand could jump around a lot. I think there's still more news to come out of government and the public sector more broadly. I don't think the bumpiness is done. But if we bring an investment lens, and to me investments are about buying good assets at good prices and then having the tolerance to wait, I would say that now's a good time to be looking at banks.
Well, I'm not so sure. I think, you know, President Zuma is determined to drive this bus into the bushes, and we've got a finance minister now at the helm who's not really a finance specialist. We know that there's not a significant commitment to fiscal discipline, and this man has run the public enterprise portfolio extremely badly in the past, so we've got that added concern about debt levels. I just think we're heading into a period where there's going to be a big overhang and a big sense of concern between now and the 2019 election.
All fair comments, in which case would you allow me to choose a specific stock, which would be Investec, which has half of the business offshore.
Very good comeback, Adrian Saville, choosing Investec as is a hot stock here in light of the news impacting banking stocks further.